What's good, YouTube? It's your boy 773 Josh, and we are back with another video.
I used to be broke as a joke, now I'm having whatever I like. I still been fighting my demons, it's been one hell of a fight. I'm tired as hell, but I swear that I never get tired of trying. I'm cool as a wind, but I still can't let that nigga cross my line. Fuck what you heard, I don't care who you are. Came from the dirt, now I shine like a star. Ask how I'm doing, I'll tell you I'm fine. Look at my eyes, you can tell that I'm lying. Never thought that I would make it this far. I sing my little song as I play a guitar. Was writing this song and I ran out of time.
And today, I want to go ahead and give you guys an inside look into the best Forex trading strategy that you can use as a beginner. Now, this is actually a strategy that honestly gave me the confidence that I needed in trading. When it comes down to getting into trading, things can seem very complicated and unfamiliar because it's something that you've never really done before. So when you just open up TradingView and you're just looking at a random chart, it's kind of hard to start there because you're already looking at a bunch of stuff that you don't get or understand, and then you just gotta kind of figure everything out. And so with this tool, this is actually something that is available to those who are actually within my community and actually partnered up with our educational platform. They offer different apps, tools, and services. If you have not seen the video where I talked about the #1 app to use to make money trading Forex, definitely go check that out. There should be an eye that pops up on one side of the screen, and it should also be linked in the description box below. But today I'm going to teach you guys the tool and the strategy that I actually use that has been able to help people learn how to actually take their own trades within their first to second week trading. So let's waste no time. Let's go ahead and get directly into the video. If you're brand new to the channel, hit that like button, hit that subscribe button so that you don't miss out on any value in the future. I had like a hiccup. So let's get to it. All right, what's up, you guys? So let's go ahead and dive into the video. Now, before I dive into showing you guys and breaking down how this strategy actually works and how this tool works, I want to go ahead and do like a little bit of research, and I want to give you guys some foundational information. When it comes down to this tool and this strategy, this tool is called the Harmonics tool, and what it actually does is it gives you different harmonic patterns to identify the best time to actually enter and exit the market. As you guys know, and if you don't know, to make money in the market as a trader, your goal and your focus is to identify when to get into the market to make a buy or a sell position based off of where the market is going to go. So you're looking to predict the movement of the market before it happens so that you can put yourself in position to profit when it actually happens. And so when it comes down to harmonics, understand, you guys, that harmonic patterns is something that actually identifies the patterns of the market. So let's go ahead and actually do some research. And success. So according to various studies, a trader's experience the success rate of a harmonic scanner when identifying potential harmonic patterns in the market is often cited to be around 80 to 50% for accurately identifying the pattern formations. So your edge harmonic pattern success rates of 80 to 90%. So there's over 400 different patterns and things that happen within the market, and the person that actually created the harmonic pattern, like as a trading strategy, is actually the same creator of this tool. And so if we go ahead and zoom in and we look at this, there are different patterns, and each pattern has already been tested to have a certain success rate. So when it comes down to bearish, meaning sales within the market, crab has 90% success rate, bat has 89, butterfly 89, Gartley 90. So these are the main patterns that I actually focus on trading. You have other patterns like cipher, you have shark, you have other things like that. I typically only focus on Gartley, butterfly, bat, and crab because they are all over 80%. Okay, so using this harmonic scanner, this tool actually scans the market day in and day out to find different patterns that the market is actually creating to help you enter and exit the market. And even better, not only does it identify the pattern, but it actually lets you know when to enter and exit the market. So I'm going to show you guys how the tool works, and then I'm going to show you guys how I personally look for the best trade setups. So right here, you guys, as you can see, this is TradingView integrated. So all of the same tools, drawing tools and everything like that that you have on TradingView, you actually have here. You have the ability to set alerts, all of that good stuff. And then you also have right here, which are the time frames. Now, this time frame on the right-hand side is completely different than this time frame. This time frame is changing the time frame of the specific currency that you're looking at, but this time frame over here gives you different trade ideas from the patterns that were actually identified on the different time frames. So on the M15, this stands for the 15-minute time frame, and all of the trade ideas were patterns that were identified on the 15-minute time frame. And as you guys can see on the right hand side next to that, you have how long ago the trade was called out. Right here you have the different currencies and you have the different pattern types. You have the 15-minute, you have the 1 hour, you have the 4 hour, and you also have the daily. Then down below, this tool not only gives you Forex trades, but it also gives you exotic pairs like the Mexican peso and the other ones that I don't know. The ZAR, that's the South African rand. The TRY, that's the Turkish currency. Then you also have indices, the top 100 tech companies, US 2000, I'm guessing that's the top 2000 US companies, US 500, top 500 companies, Germany 40, Japan 225, US 30, all of that good stuff. And then you have also commodities. So gold, oil, copper, and silver also has different patterns that you can find and enter trades. And then right here are the monthly time frame trade ideas that we don't really have any right now. So the time frames that I personally like to spend the most time on is the 15-minute and the 1 hour, simply because sometimes the higher time frame you go, when it calls out a trade, the higher move that it's looking for in the market. So it may take a little bit more time. So me, I consider myself a day trader, right? I'm okay with getting into the market for a few hours for the day, maybe even a day and a half, and looking to make my money. A scalper is somebody who's really looking to get into money quickly, get in and out the market quickly. I don't really like scalping because I feel like you need to take more trades and sometimes to make more money, and it also kind of leads to like a gamble habit, in my opinion, depending on your discipline. And then the long-term trades, sometimes I just be tired of sitting in trades for a long time. So I typically like to stick on the 30-minute and the 1 hour, and then the 15-minute at the lowest, which is also still fine for me. So what I'm looking for when I'm actually taking this trade, first I want to clear my space because there's certain indicators that I don't use. This right here is an indicator that I don't use. This right here is an indicator that I don't use, and I don't even know what they're called. You don't need to understand, you guys. There are a bunch of indicators. You don't need to understand every indicator. You don't need to use every indicator. You most importantly need to understand risk management, market structure, and you need to have an entry and exit strategy. And this tool already gives you the entry-exit strategy, and it also has a calculator to give you guys the ability to make sure that you're getting in the account, getting in the trade with the right risk to reward strategy. Okay, so you can put your account balance in there, all of that good stuff. So we're going to go ahead and go to the 30-minute time frame. As I told you guys, I don't like trading shark patterns, so we're going to skip over the shark and go directly to the NZD-JPY deep crab that was called out 44 minutes ago. Now, I'm going to double tap on here to make this a lot bigger for you guys. You have the green line. The green line is your entry. So this is where you want to enter the market at the green line. You don't enter exactly at the green line, but that's the recommended entry because that's where the pattern ended. And I'm going to show you guys a reason why. All right. So let's make that a little bit bigger. All right. And then up here, we have 3 dotted blue lines, and these are our take profits or our targets. So this is take profit 1, meaning the first target, which we're looking to exit the market with profit from. And then we have take profit 2. And then we have take profit 3 up here. So every single trade that is called out has 3 targets. And when you see the entry and the stop loss, right, the red line is your stop loss. So let's also write that one down. This is your safety net. So every trade that you enter, you have the ability to pull yourself out once you reach the point that you're not okay with losing anymore. And this is not just based off of how much money you want to lose, but this is based off of market structure. So if we look at this right here, the green line is where it's suggested for us to enter, and the targets are above, meaning we're looking to buy. So last time the market went to this green line, it hit all of the targets. Right here, it hit the first target, almost hit the second target. So when it comes down to this pattern, it is actually finding a pattern that's already, kind of is based off of what the market has shown before. In my previous video, I kind of talked about when you're looking at the chart, you're looking at the chart from left to right. So when you're taking a trade, you want to take a trade based off of what the market has already proven to show you and based off of specific zones and areas. So last time the market was in this zone, it made that upward move. And right now we're predicting for the same thing to actually happen. So what they're suggesting for you to do is get in at the green line. You want to wait until the market is after the D because that is the completion of the pattern. And then you want to get in at the green line. But I do have a simple strategy to also help you identify when the best time to actually get into this trade is. So let's go ahead and double tap. And let's bring back this one indicator called the stochastic RSI. And this is an indicator that I honestly love to use because it helps you identify the direction of the market. When the market is up here, at the red line, at some point it has to drop. I like to break this down to my community as like support and resistance. This red line is your ceiling, right? And if you take a basketball and you throw the basketball at the ceiling, what's going to happen? It's going to come down, right? And if you throw a basketball off the floor, like our support, what's going to happen? The ball is going to bounce up. So when we're looking for our buys, we want our buys down below at the floor before it actually makes this move up, right? So you look for your buys in this area right here, which I like to call a buy zone. And then you look for your sells up top, which I like to call the sell zone. But so to go ahead and break down this simple strategy, I wanted to break down that indicator very quickly. When you look at the trade, you're going to be able to see the green line, the red line, the blue lines. If the blue lines are on top of the green line, as you guys can see, the green line is here, blue line is here. That means that you want the market to go up for you to make money because your goals are above your entry. If the blue lines were below the green line, you will want to sell to make money from the market going down. So with this specific trade example, the green line is here, the blue lines are above, so we know we're looking to buy, okay? But before we go ahead and buy, I like to go to a higher time frame, like the 4 hour, for example, and I like to see if the market is moving in an uptrend or if it's moving in a downtrend. And right here, we could kind of see that since, the beginning of February, right, the market has been going up a little bit, but right here, we're in more so, I wouldn't even consider that much of a downtrend. That's more so like consolidation. Market has been moving sideways all of this time, and so it's down here. Let's actually go to the higher time frame. Let's go to the daily. Let's see what the daily looks like. Yeah, so this is like the low point. This market is in an uptrend. It hasn't really broke this low. Right here, it's retesting. Last time it was down here at this green line, it went all the way up here. Last time it came back down, it went up. Last time it came back down, it went up. So it's really just retesting right here. So this is a trade that I am willing to take for the buy. It's not the perfect, it's not the best, it's not the most clear buy, but this is one that I'm willing to take. And so what we want to see before we take this trade is this exact thing that's happening right now. Before I look for my buy, I want these RSI, I want these indicators to be down below the blue line and crossing up, okay? And this is my good buy example right here. This is where I would want to take my buy. And then vice versa for my sales. I want both of the lines above my red line and crossing down for my sell. I like to be very bougie. If it's touching the line, I really don't like it too much. If it's still under, if one is under, one is over, I don't like that either. So right here will be a good sell example, right? So let's go ahead and look and see what happened in the market, all right? We look at where we drew this red line. From this red line and this good sell example, did the market go up or down? The market dropped. So this helps you predict the direction of the market before it happens. If you throw a ball at the ceiling, it's easy to predict that it's going to come back down. If you throw a ball off the floor, it's easy to predict that it's going to come up. So once you see this reach these specific zones, this is an indicator that, hey, you could start looking to go ahead and buy, okay? So let's just say here, we got it, and then I have a final step that I like to drop down to the lower time frame before I actually take the buy. And this is some exclusive sauce that if you want it, you got to be a part of my community. If you want this tool, you got to be a part of the community. This isn't something that you could just Google and use, but I wanted to give you guys a quick overview to show you guys what was available, what was possible with this. And I want to show you guys a trade idea that played out already. So I took a trade on here. I believe it was Euro USD. Was this 3 days ago? Yeah. So this was a trade that I took 3 days ago, you guys. Let's go ahead and look at the time frame, right? 4-hour time frame. We're in this minor uptrend, right? And then we go back down to the 1 hour that the trade was called out on. And let's go ahead and zoom in. So after the D is where we're looking to take the trade. After the D and near the green entry line, the targets are up, so we know we need to buy. Okay? So because I know I need to buy, I'm looking for, let's do this real quick. So the D is here. Let's just say we seen this, right, 3 days ago. Today is the 5th. 3 days ago was the 2nd. So let's say we're looking at this right here after the D when the trade was called out on the 2nd. Okay? Now we're going to go down here and we're going to look and wait to find this in our buy zone. Boom. Let's draw the blue line. So now we know from here we're waiting for it to come down and we're waiting for it to cross up. Right here, we got the cross up. Let's make that blue. That's where we would have been looking to go ahead and enter for our buy. So if you enter for the buy right here, right, it went up, hit target number 1, hit target number 2, and it was very, very close to hitting target number 3, and you still would have been in profit in this trade 3 days later. So let's calculate your risk to reward. And we're just going to do $1 to be, to be simple. So if you would have put $1 into this trade, you would have risked $49, $50 pretty much. Okay? And there's 3 targets. So how I do this, let me teach you guys something very quickly. Let's say I have a $500 account. Okay? $500 account. The most that I risk in a day is 3 to 5%. So let's just go ahead and multiply that by 5%. Now I know I could risk a total of $25 for the day. I know that I have 3 targets, so I need to take this trade 3 times. So I'm going to divide the 25 by 3. And now I know I could take this trade and risk $8.30 a piece. Okay? So right now, the market moves in steps. Okay? It moves in steps. This is 50 steps backwards. So if I only got $8 to risk in total, and I know that the market is going to go at least 50 steps backwards before it hits my stop loss, right? Now I know that I can only put, hold on, let me make sure I did that right. $8 is the most that I could risk, and then 50 steps backwards, that's 16 cents. So when I'm taking this trade, right, I only can do 10 cents. There's no such thing as 16 cents when you're taking a trade. There's no pennies, okay? So 10 cents. So let's just say I took this trade for 10 cents, right? 10 cents 3 times. I risked a total of 50 pips, 50 steps in the market. We multiply that by 10 cents. That's $5. 5 times 3 is 15. So I risked a total of $15. Target number 1 would have paid me $10, 105 pips times 10 cents, $10.50. The second one would have gave me $16.20, right? 162 times 10 cents. And then the third one would have gave me $25. So I would have risked $15 to make 51. If you got a larger account and you risk more money, let's say you put in $1. You risked $1 3 times, right? 50 times 3, that's $150. After you hit target number 1, that's 105 times $1, that's $105. $1 times 160, that's $160. So now you're up $265. And then once it hits target number 3, that's $250. $1 times 250. So you risked $150 to be able to make $515. And why this is so powerful is because you won't win every single trade. But even if you lose 3 trades, 150 times 3, That's 450. Out of all of the targets, you would have made 500. So you could have lost this trade 3 times in a row, right? Lost three trades, not 9 trades actually. You could have lost 9 trades in a row and only won 3, and you still would have been profitable. So one thing I want you guys to know and understand is that in trading, you don't need to be perfect. Your goal is profitable. Your goal is not to win every single trade. That is impossible. You want to have a good strategy. You want to understand how much you should be putting into each trade. And with a good tool or strategy like this and understanding risk management, you could become a profitable trader. So if you're somebody that's brand new to trading or even experienced in trading and you want some tools and resources like this that could simplify trading, allow you to make more money within less time staring at the charts or even trying to figure out what's the best thing to trade, this tool gives you a bunch of trades, over 200 different trades every single week, you guys. Over 200 trades a week. This is the entry. This right now is about to hit target number 1. This was clocked out 13 hours ago. This right here, the entry is here. It reached all 3 targets. This was 17 hours ago. EUR, AUD, right? It came down to the green line. It never hit the stop loss. It got close, right? From the green line, it went down a little bit. Target 1 and target 2 hit. This was 19 hours ago. These are all trades that you could have made money off of if you had access to this tool. So if you are somebody that's looking to get access to this tool to make trading simpler, easier for you so that you can start profiting in the market as a beginner or even as an expert, all of my contact information is in the description box below. Reach out to me and I'll show you how you can not only get this tool, but get the proper education, live mentorship, and also be in a community of like-minded individuals. If you're brand new to this channel, hit the like button, hit the subscribe button, and turn on post notifications. And I cannot wait to see you guys in the next video. If you have any questions about this specific tool, drop it in the comment section below, and I will be willing to make new videos to go deeper into detail or answer whatever questions you guys may have. But this is the end of the video, and we are out.
Nowadays all of my enemies wanna be friends.